Hello everybody, welcome back to the Invest in Wealth channel. Today's video we're going to be taking a bit of a look here into my non-registered account with Wealthsimple. This account is sitting at approximately about $96,000 here. We're going to be taking a look at my holdings, kind of my thought process behind this account, and without further ado, let's just get straight into it. Before we jump into the actual holding, let's take a look at how my portfolio has been doing the past month or so, in the past year here. So in the last month, we're up 6%, so about 5,200. Last 3 months, we're up 3%. Last year, we're about even there. And then all time, we are up 8%, so $7,200 there, nothing to complain about. First stock we have here is Allied Properties. This is probably my favorite REIT here. I own about 79 shares in this non-registered account. I own some more in my tax-free as well. Good, about 8% yield. This is a monthly payer, so this does give some good income. Last year it's dropped quite heavily here, as all REITs have. Hoping this will bounce back soon, and when it does, there's room for a lot of gains here. So yeah, I really like Allied Properties as a REIT. Next position here, we got Bell. Can't say too much about Bell, except it's kind of, you know what you're gonna get. Like, it's kind of a steady stock. It was up quite a bit last year, up to 73. But it kind of hovers between 58 and 63. And you just collect a 6.5% yield and kind of just forget about this stock. Not a huge position here, so I'm still going to hold for the long term. So I do like Bell. Next, we got Bank of Nova Scotia. I think this is my third largest holding in my portfolio. Got about 200 shares in the non-registered here, and 15 in my first home savings account. The stock, as all bank stocks have, got hit quite hard the last year here. Moving forward, I see BNS as a good long-term play. And while we wait for the price to bounce back, it's still paying about 6.2%. Next up, we have Canadian Utilities. I've recently just bought back into this position. It's a very small position right now, but looking to build on this here. Utilities are kind of volatile here in this high interest rate environment, but this company has paid out dividends for, I think, the last 50 years, and their yield is sitting at 5.21%. So when this stock is around $33, I tend to grab some here. So looking to buy a little bit more, but yeah, very small position, so won't spend too much time on this one. Let's go back here. Next up, we have Enbridge. I really like Enbridge. This is my second biggest holding here. It's dropped quite a bit here the last year, 12.5%, but really liking this company. They just have a large network of pipeline in Canada. This company is really hard to replicate, and as well, they're starting to dabble in that renewable power. So going forward, I see Enbridge as a big long-term play here with that $100 billion market cap. They also pay about a 7.1% yield, so nothing wrong about that. Kind of my main goal with this portfolio was mainly dividends with a bit of growth. I try and find some cheap undervalued stocks with high yields, and I just pick them up. That's pretty much the main goal with this portfolio. It is mainly an income portfolio, just trying to build this compounding interest over time. And when you buy stocks that are on sale, you do get that growth as well. So that's kind of my my thought process with this portfolio. So next up here, after Enbridge, we do have Enbridge's Split Corp here. Have about 500 shares. This gives me about $65 a month. I don't mind this stock at all. About 10.5% yield. It does just kind of go flat, as you can see there, but no complaints as you're getting paid just to kind of hold the stock here. So I do like ENS, especially with that monthly income. Next on our list, we have Go Easy. The stock has done quite well for me, actually. I wish I bought a bit more 3 months ago when it was kind of in the high 80s and 90s there. Yeah, we're up almost about 20% here. Yield of about 3%, but I do really like this stock. Like back in September 2021, it's gotten up there over 200s. So yeah, not a huge position. It's only 2.24% of this portfolio, the non-registered anyway. So yeah, I'm still gonna hold this, just see what happens with it. Next up, we have my insurance play, Great-West Life. It's actually past $40 for the first time in quite a while. Last time was back in February 2022. So might be looking to trim off a bit of this position, but overall we're up about $1,000 here, 18%. Nice yield. My yield on cost is more like 7, but this is my insurance play for this portfolio, and it has paid off. Moving along here. Next up, we got HMAX. Just kind of a monthly income play as well, just to get some more income for the portfolio, so I can just buy new things or whatever. So this is the Hamilton Canadian Financial Yield Maximizer ETF. Small position, but I think this is wrong here. This yield is more like 12%. So not much to say here. Just basically just collecting some monthly income from this small position. Let's go on back here. Next up, we should have HYLD. Again, just kind of, this is a same company there, Hamilton Enhanced US Covered Call ETF. Again, with a big yield, 13% there. I like this ETF because it uses 1.25% leverage. So that's it enhances the yield a bit. Plus, you could see a bit more growth here, but it's also more risky. So buy at your own risk. But yeah, just mainly a monthly income play and get a bit of growth out of that as well. So can't complain there. I own this in, I guess, just 2 of my accounts here, my RRSP and the non-reg. Let's go on back. Next up, we got Royal Bank. Okay, up 6.25%. Biggest bank in Canada, biggest company in Canada. Need I say more? About a 4% yield. This is my smallest bank stock position, but definitely not a bad time to add here. I see this growing, even surpassing these highs in the upcoming years. So definitely a good time to buy Royal Bank. Going back, next up on our list, we have TD. This is my second largest bank holding behind Bank of Nova Scotia. On about 110 shares. I've been dollar cost averaging down in this for quite a while. I was buying up shares when it dipped under 80 there, so that's worked out for me. It pays 4.4% yield, second largest bank in Canada. Definitely a long-term play here. Plus, if it goes back to these highs, that's just icing on the cake mainly. So yeah, TD Bank. Next up, we have my biggest position here in the portfolio, TXF, CI Tech Giants Covered Call ETF. So this is a covered call ETF, about a 9% yield here. It's 25 of the largest technology, so you do get that growth as well as that nice yield as well. So this is my biggest position here. They pay me about $3,000 in dividends a year, which is awesome. That is excellent. And this is a quarterly paying dividend. Next up, we have ZWC. This is a BMO Canadian High Dividend Covered Call ETF. This kind of just trades sideways, but you do pick up a nice 7.4% yield there. It's a decent position. I mean, I'm not really expecting a lot of growth out of it, but if I can pick up 7.5% monthly anyway, I'm not too concerned what the price does here. Just mainly an income play. Going back here, we got ZWK. This is a BMO Covered Call US Banks ETF. I got burnt pretty bad in this this year. As you guys know, what happened in the States and the US banking was not a good time, down about 30% here. I did sell at quite a big loss, but whatever. Win some, you lose some. About 11% yield here. I'll just hold these shares. I probably won't add any more into this position here. Okay, so that does it for the Canadian funds, Canadian dollar of my non-registered here. Let's hop on over to what I hold in US funds, which isn't a lot, but all-time are up 12%. This is a fairly new account that I opened. I just had some US cash just kind of sitting around that I transferred in here. So let's take a look at my holdings super quickly here. We got AMD, own a share. Amazon, we got a share. Google, we have 1 share. McDonald's, we have a share. Qualcomm, we got a very small position here. Visa, we got about a share. I recently did have Tesla in this portfolio, but I did sell it. That was a gain about I was up about $100 a share there, so we'll take it. Sold that, and yeah, this account's just kind of basically just so I don't have cash sitting around, basically. I'm just gonna hold these companies, just kind of see what happens. Okay, that does it for my non-registered account here at Wealthsimple. Hope you guys took something out of this video. Looking forward to this week in the markets. We'll see what happens. I am pretty happy with where I'm at in this portfolio. Mainly, yeah, like I was saying, just dividends and growth and monthly income. So yeah, I'm happy with this 8%. We'll see where this is at 1 year from now, and I'll keep you guys posted. Thank you so much for watching. Goodbye.